Only 3.0. So in today's video, I want to talk about a very important topic, and that is market psychology. When to buy, when to sell. If you've been around the market for any length of time, not just cryptocurrencies, but stocks, real estate, there's a very common psychology among market players, and that is to buy when everyone else is buying and sell when everyone else is selling. Now, to make money in any asset, stocks, crypto, whatever it is, you need to do the reverse of that psychology. You need to be buying when everyone's selling and selling when everyone's buying, because the greatest opportunity is when you're contrarian, when you go in the reverse of the market. If the market was always correct, i.e., if the general consensus of the market was always correct, then everybody would generate the same returns in the market. Everybody would be rich, and everybody would make money, and it doesn't really work like that. The ones that really make money, the minority, are the ones that can be focused and have got the psychology right. They are buying when everyone's selling and selling when everyone's buying. So the current market we find ourselves in, the bear market, is the market the professionals really love. This is their market because the smart money are buying in this bear market, and when the bull market comes, the smart money will be selling. What you find in a bull market is that's when the retail investors come into the market and start to buy. And times like this bear market, that's when retail investors have been scared off, they've sold, they've run away. To be successful in this cryptocurrency market and any asset in general, you need to understand market psychology. So let me explain and show you a few tokens, a few coins, and just to give you an indication of how market psychology works. So let's use our favorite meme coin here, the Dogecoin. Very popular coin among retail investors. So let's look at Doge. So if we zoom out and look at Doge on a longer time frame, give you some indication of how market psychology works. So at the blow off top here, when Doge had that big run up, when Elon was pumping Doge every other day on Twitter, Doge was having a daily trading volume of about $19 billion. The days following, you see you got 20 odd billion dollars here, $15 billion. So what this volume meant was this is the time when everybody was buying towards the peak. Everybody started to FOMO in and buy. If you look at Doge earlier, in the a couple months earlier, look at the volumes: 400 million, 300 million a day, 60 odd, 70, 80 million. You see, so when Doge was quiet, there was still the same Doge when it was at 20 billion volume versus the 80, 70, 60 billion volume. Still the same coin, but nobody wanted to buy Doge when it was quiet. Everybody wanted to FOMO in when Doge was being pumped all over Twitter. Again, look at Doge volume now that the market's pretty much quiet down. We've gone from 20 odd billion dollars of daily volume to 300, 500. Look at the daily volumes now, significantly fallen. That means those retail investors that were absolutely jumping into Doge a couple months ago, they've pretty much ran away and they don't want to touch it anymore. Still the same Doge, hasn't changed much, just that it's not being pumped on Twitter every day. So let's use a more stronger fundamental coin like Uniswap. So Uniswap is one of the most important projects in crypto because it's effectively the backbone of decentralized finance. I'll go into decentralized finance in another video, but just think of Uniswap as one of the most important protocols in crypto. Makes lots of money, has an incredible value proposition, likely to be around for many, many, many years. Top quality projects, one of the best projects you can find. So let's zoom out at Uniswap and look at the trends when everyone was buying and when everyone was selling. So in Uniswap, so right here is when everybody was buying Uniswap. Look at the volume: $2 billion a day, 1.5 billion, 1.7. Look at these volumes, absolutely insane. So everybody wanted to buy Uniswap when it was being pumped, when you went on Twitter, you went on YouTube, there was just videos coming out about Uniswap and everybody was going crazy for Uniswap. That's the time everyone wants to buy. They buy at the top. So when you buy, when everyone else is pumping something and talking about something and something is frenzied, you're going to buy the top. Now, it's the same Uniswap. It's just the price has come down from, what's that, $42 to around $5, $6. But look at the volume now. You're at 80 million, 150 million. Look at the daily volume. You're probably talking about averaging $100 million a day volume. So we've gone from averaging around close to 2 billion, $1.5 billion a day of volume when it was absolutely at its peak to $100 million volume a day. That is a significant reduction. You're talking about a 95% reduction in volume. Still the same coin, still the same project. Probably got, I would argue much better fundamentals now than it had back then. But nobody wants to buy it here, but everybody wants to buy it up here. And what I'm trying to really emphasize in this video is market psychology is key to succeed in the cryptocurrency space. Don't rush to buy when everyone else is buying and rush to sell when everyone else is selling. You buy when no one wants to buy and you sell when everyone wants to buy. So again, the best time to buy was here. Best time to sell was here. Best time to buy is here. We can look at other projects, show you the same thing. Let's look at Cardano, for example. So again, Cardano, very solid project, same project, fundamentals haven't changed. Let's look at the behavior of participants. So when it had the crazy run up last year towards August, look at the daily volumes, 8 billion, 4 billion, 6 billion, 10 billion. Look at that, absolutely insane volumes when people were just going crazy for Cardano. Look at now, volume is down 600 million, 700. Look, it's going nowhere near the volume it had at the peak. 500 million. It's nowhere near the peak volumes, but it's still the same coin. It's just upgraded to its Vasil hard fork, so the fundamentals have got stronger, but people aren't buying. This is when you buy, when no one wants to buy, because still the same coin, still the same fundamentals. Very likely that Cardano is going to get back to $3 and even peak past this in the next bull market. But nobody wants to buy Cardano here at 40, 50 cents. They all want to buy here at $3. Key to succeeding in the crypto space is understanding market psychology. When things are cheap, when markets are quiet, when people are scared, when they're running out the market, when everyone's selling, it's the time to buy because the fundamentals haven't changed. When the market comes back and it's bullish, frothy, ecstatic, that's when everyone's going to come back into the market and start to buy, and the opportunities to buy crypto at today's prices won't exist. So stay focused, understand that market psychology is key, and capitalize on these quiet times in the market. Hope you like that content. Thank you for tuning in. Please like, subscribe, leave a comment and share. Have a good day, everyone.